The NASDAQ 100 closing lower by just over 2% today, ahead of NVIDIA earnings next week. Joining us with his view on the tech sector is Eric Sheridan, managing director at Goldman Sachs, who does not cover NVIDIA. So I'm not asking you specifically about NVIDIA. Eric, welcome. But I can't help but notice today, after this rough day, Amazon's down 1% for the year, Apple's down 2%, Microsoft's down 3%, Google, Alphabet down about 5% year to date. Is this an opportunity or a warning?
Well, I think it depends on the name, John, and thanks for having me on. I think there is a clear shift going on in the AI trade away from purely investing in the infrastructure layer to also looking at the application layer. So if you were to look at Meta year to date, that's a very different dynamic than maybe you've seen in some of the infrastructure stocks that benefited dramatically from the build out of AI if you look backwards over the last 6 to 12 months. So I think there's a key shift, started with DeepSeek and what came out of China a couple of weeks ago, as people started to focus on maybe moving from training to inference and infrastructure to application. And I think those themes are broadly working their way through the market over the last couple of weeks.
So should we expect to see the AI names traded, the AI application names, I should say, particularly in enterprise software, trading differently going forward than NVIDIA and the infrastructure names like even a Dell, Supermicro, et cetera?
Well, I think you are going to start to see some diffusion. You know, there typically are these market themes. Magnificent Seven has been a dominant theme in the market for most of the last year plus. But if you look at the year-to-date performance of some of those stocks, there have been some breakdowns. So within our sector, we would say having exposure to the digital consumer, we still like that exposure, even with some of the debate around consumer spending over the last couple of days. So Amazon and Uber obviously not in that definition of the Magnificent Seven. Meta, as a play more on playing offense than defense and a little bit more of the application layer than the infrastructure layer within digital advertising and the AI theme. I would look somewheres in terms of some of names like that as opposed to just painting all these names with a broader brush.
DeepSeek said that it's going to make 5 of its code repositories public next week as it continues with a commitment to open source its technology. We saw Chinese tech names really led by Alibaba in particular the last couple of sessions, powering broader markets in that part of the world as well. Should we start thinking about this from a Chinese versus U.S. AI tech trade from this point on?
No, I wouldn't look at it just as specifically as that. I think the broader theme, if you zoomed out, would be less about geographies and a little bit more about that we're moving from training to inference. So, you know, we've built these huge foundational models. They will continue to get better. But when I've been on before, what we've talked about, Morgan, is the idea that the incremental improvements in these foundational models are starting to slow down. So, like most computing shifts, what typically has to happen is what gets built on top of the infrastructure layer. You know, when we went through the mobile computing shift, it wasn't spectrum and network as to where all the value was derived. It was building businesses like Uber, Airbnb, and DoorDash on top of the mobile computing cycle as to where there was a lot of return on capital that was generated. So in the consumer side, which is where my focus is, what is the adoption rate that we're looking at over the next couple of years of things like ChatGPT, Google Gemini, Perplexity, Meta AI? That's where the proof points are going to be on the potential visibility into return on AI. If they come through, the CapEx will continue to come through and the return profile will continue to become more clear. If they don't, then we'll have a debate as we get deeper into the year as to the sustainability of some of the CapEx trends.